So for those of you that are new, we have a format which is to analyze the fundamentals that's in the market, that's driving the market first of all. And then after that, we look at the chart technicals to identify some trade setups and trade plans. You should have all, those of you that have already registered and sent your ID back, you should already have been placed in your groups. We've created the groups. We opted to go for the stars. Okay, so for example, the group names are Phoenix, Sirius, Orion, Andromeda, Mensa, Hydra, Pegasus, and Alpha. And of course, we took on board some of your requests about having a signals only group to send out the signals. These signals only groups are literally for the trade signals, so try your best to resist chatting in the signals group so that everyone can just go into the group and see all the latest trade setups that's been sent. Okay, so we went for the stars because they're all stars and we felt that they were fitting. Right, so Paul says, when will be added to the groups? Quite a few of you have already been added to the groups. So if any of you has not been added to the groups yet, just message or send an email to Matt Jones. His email address is matt@mdtradinguk.com. All right, I'll just type that in the chat for you. Okay, that's Matt's email address. If you've not been added to a group yet, just email him or message him if you have him on WhatsApp, and we can get that sorted out for you. Okay, so first of all, I always ask the group, because part of your homework every week is you yourselves, for those of you who are new, your job is to keep an eye on the market fundamentals, and there's various different medias you can do that from. You can choose to tune into Bloomberg TV on Sky and on Virgin, and also they have BloombergTV.com or Bloomberg.com/TV rather, and you get the same channel, it's just streamed a bit slower. You can use CNBC, you can use the internet and look at certain media outlets like the Times, the Wall Street Journal, and those kind of things, market news channels, and just get abreast of the fundamentals. It's the fundamentals that drives the market. Okay, for anyone who is in doubt of that, just look at the market reaction today to Donald Trump's speech. Okay, it's the fundamentals that drives the markets. All right, so use those different media outlets, and you'll just do a Google search on market news and so on, or FX news and that sort of stuff, and you'll get lots of different outlets where you can get fundamental data from, and just start to read some of it. Some of it might not make sense. Yes, Greg says Forex Factory. You can use Forex Factory, which is a good source of news. I think I may have that up here. Forexfactory.com is a good place to source data. They give you all of the market news announcement. These are the scheduled news announcements. But if you click up the top here where it says news, when you click there, then you can get a whole host of the data, and you can go in depth in some of the things that's going on. Okay, so you can do that. Also, another one you can follow. All of you, if you don't have Twitter, then sign up to a Twitter account. For those of you that don't have a Twitter account, sign up and follow LiveSquawk. Okay, I'm gonna just copy and paste that link in the chat, and you can set alerts up on your phone as well. Okay, you can get this on your phone, and you can see all of the news as it hits the wire. There is all of this data, okay, as it hits the wire, and these reports that you'll see that keeps coming out will affect the market. Okay, Mark Carney's speech earlier on today, you know, all of these things, whenever they come out, they affect the market, and us as traders, we need to be aware of this fundamental information so we are not caught the wrong side of market reaction. Okay, so we need to make sure that we are fully abreast of all of the fundamentals that's going to hit the wire. What do you mean, John, the joint conversations? All right, so that's you know, some different sources you can get the news from. Remember, CNBC. I'll type this in. CNBC, and they have a website as well, cnbc.com. Bloomberg as well. All right, you can get the different news outlet from there. So those of you who has been following the data so far, what have we got? Type in the chat what sort of fundamental data have you guys picked up on so far, and then we'll do the usual roundup, and then we'll start to look at some trades. Okay, so type in the chat who's done some fundamental research. What have you found out? Anyone? Nobody been back at the markets yet? Yes, Stuart says the FTSE's at an all-time high. We can take a look at that today. I've had some requests about planning trades on that. Paul says Trump's speech didn't really speak about fiscal policy, so the dollar weakened. Yeah, he also affected the healthcare sector in the stock market after he basically slated and criticized the Obamacare. The healthcare stocks came off and weakened during that speech. Brexit back in the news with a vote imminent from Wendy. Yes, Brexit is looming again, and we saw the pound make some lows today, breaking, you know, below the 121 barrier. It went as low as I think 120.30 or something like this, and this is due to comments from Theresa May, and this hard Brexit style approach, and the fact that it appears that we may not be going for the single market route. And you know, she did say that she was misunderstood, but it appears to protect the borders, that we may opt out of the single market, and that's you know, grave uncertainty, and that started to see the pound weaken off quite a bit. I've actually had a short on the pound for the last 3 weeks. It's came back up a bit today, but it's still in profit at 187 pips. You can see I've been short the pound over here. I have a nice tight stop on over here. Just blow it up a bit more for you to see. So we've had this kind of rally here, and today, you know, we had some nice lows, and it's just come back up here again, you know. But I'm pretty short sterling, and you know, I'm expecting any rally that you see in sterling is basically, you know, a selling opportunity. I'm not really expecting any strong pushes in the pound. Okay, if you look at the, you know, the wider charts, you can see that the pound is very bearish. We're just, you know, looking to come back and head towards the flash crash lows of the one, you know, those 117s that they got down to. You look at the monthly chart, again, you can see tight retracement on the pound, but this thing's pretty much heading south, you know. So we may even, you know, do what the pound has always been doing since it started to make its downturn, which is to break the lows. You can see it's always broken the lows, and we're heading back now to break those lows. So, you know, potentially we could see, you know, quite a bit of bearish movement in the pound. How low might it go? To unknown territories. Okay, I mean, I have data on this chart going back to 1995, and we've never been this low in the pound. So, you know, it's, you know, quite an area of uncertainty and reaction from the market, because, you know, we are, you know, breaking all-time lows. So that's the position we're currently in. As I said, it's up, you know, 189, 190 pips at the moment, and I'm still expecting the pound to weaken off. I've still got a relatively tight stop on that trade. All right, and I've been in there for 3 weeks. We've switched over to sort of, you know, pretty much long-term mode on this. So I'm now just trading this on daily charts only, and we'll see where we are next week. Hopefully we're still in the trade, and it's you know, it's still moving in the right direction. Wendy says pound Aussie broke through the level we planned with you back in November. I took a short for 80 pips on Monday. Still looks like it's heading down and looking for the 158.03 level. That's excellent. Let's have a look at the pound Aussie. Yeah, I mean, that's again pretty much the same sort of thing. You know, we're very, very bearish. We had this consolidation, and the trigger was this, you know, you can see these double bars here, which is you know, quite a weak sign, and we've just basically sold off ever since. That's quite nice. Breaking through our significant levels. These lines on the charts, for those of you who don't know what they are, these are our significant levels. You'll get them in your training when we announce the training next week. Okay, so all of the educational material will begin next week for all of you in the groups. Okay, so we will get down to business in this. So yeah, just bear with me on that. Oh, okay. I was putting them in the chat, John. So in your chat, you should have like I think it's an arrow. You just got to click it, and it will open up, and you should see what I'm typing in the group chat. Everybody should see what I type in the group chat. All right. Nick says if it's an all-time low, won't traders be cautious to short into the unknown territory? So Nick's referring to the pound. Yes, I mean there will be nervousness, but the thing is, fundamentally, the market's going to respect the fundamentals, and the worse the situation gets with, I mean, keep in mind, the Article 50 activation date has already been announced, and we're just a couple of months off of that, and we haven't even really begun doing any negotiations. Boris has gone over to America to try and get some assurances, trying to say that Britain's going to be first in line. Well, I mean, I'm not really buying that, to be honest, for negotiations. It doesn't look like we're trying to open talks with Europe. So, that uncertainty alone is going to cause traders and investors who currently have their money in the pound to start to look for some kind of safety. It means that they will, invest their money elsewhere, and they will sell the pound and buy other currencies, perhaps safer currencies. And therefore, even though the pound will be at all-time lows, the chances are it will break those all-time lows and continue to fall further. So we'll see what it does. Shreya says, is it okay to get in now? Not on the pound dollar yet, because it's having some profit take from the lows of the Brexit lows. However, this pound Aussie, as Wendy said, does still look good for a continuation. It looks nice for a continuation, and we could. This looks pretty good for a planning tonight. We found support on our level. If you look at this, and this is the nice things we like to see. Look at the lows. Right, the low of this bar is our significant level, the 163.51. It's perfect technical analysis. So we can possibly plan some trades on that. John says, I called the pound pairs bear last year when pound Aussie consolidated sideways. For 4 months across 4 pairs, I made an uneducated call of possible recessions. Everyone brushed it off. Each pair moved like 4,000 pips. Good, excellent analysis, John. The big question is, what did you do about it, my friend? Did you get any of it? Did you take any of those trades yourselves? This is the thing. Did you get involved, and did you profit from those predictions? All right, so I'm going to do the usual market roundup, and then we're going to get into some trade planning. Okay, so bear with me. I've written some notes. I'm just going to read them through to you. So the US dollar 2016, the US job growth, the labor force rose by 2.2 million new jobs were added to their labor force. Most of that was in healthcare and social assistance. This week we've seen a fairly choppy US dollar, or consolidated US dollar, and this is due to the slowdown in the bond yields. The US Treasury 2-year and the 10-year bonds have been the main driver of the US dollar. Whilst the mixed dollar during Donald Trump's speech, and then the dollar actually weakened off, it's now starting to recover a bit off of its lows. His attorney, Sherry Dillon, said he's not in violation of the Emoluments Clause of Constitution, and that he would donate profits from payments by the foreign government to his hotels to the US Treasury. This is in order to give something back to the taxpayer. The healthcare stock started to take a bit of a beating after he criticized the Obamacare. He also reiterated that he would not be releasing his tax returns. No surprises there. This comes from requests to prove that there are no conflict of interest, and he did set out what he was going to do with his company and his family members involved. The euro has been taking advantage of the weak British pound due to the hard Brexit fears. The euro moved over 100 pips against the British pound, and the Eurozone outlook fairly positive in one breath, which is low interest rates, a weak euro that's attractive to foreign business, and a new end of austerity. Manufacturing activity and economic sentiment is at their highest level since 2011. Unemployment is also falling, and the long-awaited cleanup of their banking system is finally underway. Now for the not-so-good news. There's political risk and of course the surprise election of Donald Trump, and there's still uncertainty to how that will fit in with the plans of the Eurozone. Of course, the Brexit vote from last year is still weighing on the Eurozone. There is a few that are willing to bet against further revolts in the Eurozone. Elections are looming in Holland, France, Germany and Italy. So, you know, all of that is putting pressure on the euro at the moment. The British pound has been quite weak after comments from Britain's Prime Minister Theresa May. She claimed that she was misinterpreted. The markets believed that May's comments was a sign that she is willing to accept a hard Brexit in order to keep control of the UK borders. Meanwhile, the UK retail sales were up by 1%. The Canadian, so we have an increase in average Canadian oil rig count that saw some strength in the Canadian currency. Also, the oil prices have stabilized after fears that the OPEC was not going to fulfill their promise to cut oil production. Saudi Arabia, who are a member of the OPEC group, started reducing its crude oil productions. However, uncertainty remains as to whether the other major producers will follow on their agreement and cut crude oil production, because the Iraqi government has announced that they are going to raise their exports from Basra's port in February, and they are going to be pumping out the highest level of crude oil on record, and that has a risk of destabilizing the OPEC process in all the members and non-members agreeing to cut crude oil. So we'll have to wait and see what happens there. Finally, we have a fairly strong Australian, and this is due to the Aussie retail sales. They were first of all slightly up by 0.2%. They were expected to be up by 0.4%. But reports from China came in fairly mixed. There's good points and negative points. Producer price index rose by as much as 5.5%. It's very, very strong for Australia, and this was way above market expectation. At the same time, consumer price index rose by 2.1%, and even though it went up by 2.1%, it was below market expectation. Okay, so that's the fundamental roundup for this week. That said, what are the currencies we are likely to see some good setups on? Type in the chat and we will have a look at some charts and see if we can see some setups forming we can plan trades on. Okay, so we've got the New Zealand dollar, and I'm just going to write down what you guys are typing. Pound Aussie, yes, we'll have a look at that one. We're on that chart right now. Pound Aussie, and we'll take a look at the FTSE chart, as I've had quite a few have been requesting that. Pound CAD, you look heavily on the pound. Again, a few on the Pound Aussie, we will look at that. Euro Yen, sister. Take a look at the Euro Yen, Pound Yen, Dollar CAD, Aussie CAD, and Euro Dollar. All right, let's take a look at those first, and then we'll see if we find anything else. So, first of all, we'll have a look at the Pound Aussie as we're on this chart. It's one of our selection pairs. And when we are planning trades, so those of you that are new to these sessions and new to trading altogether, we look to identify trade setups using our daily time frame. Okay, so on your MT4 platform, you select the D1 like this, and we are looking for our daily time frame. Okay, now we've got our significant levels on our charts, and we can see today there was some support at the 163.51, and this is really good to see. This is very good to see, because you can see right now this thing's selling off, it's coming down. Our bias is to be short. Fundamentally, it's to be short. Technically, on the charts, you can see that the pound is weakening. So we want to look for a reason to go short the pound. We want to sell the pound. Now, this is a nice fundamental pair, because we read out in our roundup notes negative things that should continue to weigh down on the British pound. We also read out quite positive things to see a rally in the Australian. So to be short the pound, long the Aussie is the fundamental correct trade. And this is the reason why you're seeing this beautiful move in the pound Aussie. So it makes sense. So we want to continue that move until the chart tells us something else. So how can we find out where is the best place to go short? So we can see from the daily chart that we want to be short because it's selling off. We can see that we have support on this chart. Okay, we have support at 163.51. It came down to this low and bounced off of our significant level, which is a support area. Okay, it's a support area. So what we're going to do is we are going to go down to our execution time frame, and see if we can find the link in order for us to plan the trade. So this is our 30 minutes time frame. We're going to change down to the 30 minutes time frame, and we will still have our lines visible on the chart. And here you can see the beauty of technical analysis. Look at this. 3 times it came to the level and bounced. Okay, 3 times it held and it moved up. So how do we explain that it came to this point, this 163.51 level? How do we explain that it bounced? So simply, when it came down to this level, a recognized area of support, it's one of our significant levels, buying pressure came in. Traders started to buy. That buying pressure was overwhelming at this level. They prevented it from breaking the next level, okay? They prevented it from breaking the 163.51 simply by increasing the volume of buying pressure at this point. So what this means for us is, in order for that volume, for those individuals to do that, to buy in such a volume that is strong enough to stop this decline in its tracks. In order to do this, do you think these traders would need to protect themselves in case the market did not or will no longer go in their favor? Do you think they would protect themselves? And if so, how would they protect themselves? How will they protect themselves? Type in the chat. The stop losses. Good. They're protective stop losses. Okay? Now, if those guys were buying from here, this means that they're going to protect themselves with sell stop losses. Another word for a sell stop is a sell order. That's what it is. A sell stop loss is a sell order. It's an order to sell my position, to sell my shares, which means that if that order is triggered, then this currency will start to weaken and it will make a further move to the downside. If we are looking to go short, is that not the ingredients for us to enter our short position and ride the decline down? Does this sound like a plan, guys? We know for a fact that there was buying pressure here, because if there was not buying pressure here, it would not have stopped. Okay? It wouldn't have stopped. If there was no buying pressure on this support point, it would have continued down. So we know that there was buying pressure because it stopped. That buying pressure has to protect itself. So this means by looking at this chart, we can identify that below 163.51 there are sell stop orders. And the sell stop orders is the fuel that we need to take us below the 163.51. So we can do this. We can set up a sell order. So 163.51. Okay, so we can say something like 163.40, 11 pips below. We don't want to be too tight to the level, because we want to see that those orders begin to get triggered, and then we want to get triggered when those orders are being hit, because once those orders begin to get hit, then the momentum is going to increase, and when the momentum increases, that's what's going to drive this thing down. That's exactly what we want. So we can say my short entry is going to be 163.40. Okay, 163.40 is going to be my short entry. Now, when it breaks below the 163.40, we'll get triggered into a sell trade, a short trade. Okay, so we will be selling and expecting the prices to continue to decline. We also have to protect ourselves from a move that means it breaks below, triggers us in, then turns around and goes against us. We need to protect ourselves too. No, Seb, this is going to be, I remember now, before we were doing this a different way, weren't we? So this is a, so I'm not going to say short entry, I'm going to say sell stop, so you understand what type of order you're going to use. This is a sell stop. Okay, it's a stop order. Okay, so our sell stop entry is going to be the 163.40. All right, so we want to protect ourselves. Now, I know some of you has not got the education yet, and you will do starting from next week. When this price, this 163.51, if this is eventually broken, okay, if it's eventually broken, because right now it has a name, okay, it has a name, and that name is support. Okay, that name is support. Okay, because as you can see, it's holding the price at these levels. So it supported the price 3 times. It supported the price over the space of 2 hours. It could not break below this level. It has its job as support. Okay, now once the price breaks below the 163.51, and then it will trigger us into the trade, it's going to do something like this. This is typical, this is usual. So it will break below like this. Okay, and then what it will usually do is it will come back to this area that we said was support. Okay, and it's going to test it. It's going to confirm that it's now, its new role is resistance. It's going to try to resist breaking above, and then it's going to come back down and sell off and do exactly what we want it to do. This is textbook behavior. Now obviously it doesn't always come as clean as this. Sometimes it does, but this is textbook expectation of what we expect the prices to do. So given that in mind, if we are going to start selling this, to go short below 163.40, then we need to protect ourselves with a stop, and that stop needs to be, because we expect it to come back and test the 63.51, it means we need to place our stop losses above 163.51. Okay, now we don't really have any chart data because, as you can see, the price is sitting here at 163.86. So what we have to say is this: stop loss this is the short stop loss, or let's say sell. Our sell stop loss, okay, is going to be the last swing high above 163.51. Okay, this is where our stop loss is going to be. And a swing high is something like this. It's when the prices make the low, come back up to the high, and then turn around. That's the swing high. So here you have like a previous swing high, and these moves here, this is a swing high, a swing high. It's always the previous swings. Okay, so we're saying the last swing high. So what we can expect the price to do here, okay, is to come down, and let's say, for example, it does this. Okay, let's say it does this, it comes back up here, then rolls over, and then, you know, we get triggered here, for example, you know, then that high, which is, you know, the one that comes after this one, this is going to be a lower swing high, so we can place a stop like this. If we had this break, because the swing high is over here, it's going to be kind of too high for our stop, so we might have to wait for it to come down, come back up, make another swing high, which is closer to our level, so we'll be able to manage our risk, and then comes down, and then we can place our stop loss above here and have the same entry. So there's different configurations. Okay, so that's kind of what we're looking for with this. Now, you can set it up as a pending order later on tonight. I mean, you've still got time. It's only, you know, 10 to 9 now, Sharia. So see what it looks like later on tonight. We may get something over here, you know, beforehand. So now we know where we're going to enter. We kind of have a rough idea of where our stop's going to be. Okay, we want it to be above the swing high of the 163.51. Now we need to look for where we're going to take our profit if the trade goes in our favor. Where will we take profit? So typically we're going to look for the next support area. Okay, and our next support area is the 162.54. Okay, 163.54 is the next support area. So what we want to do is just come, we're not going to let it get like this, because you can see that they bounce. The buying pressure is there, so we're not going to wait till it gets there. We're going to come out just before it gets there. All right, maybe like 10 pips before it gets there. Okay, so it's going to be like 162.64. So we can say our target, so our profit target is going to be 162.64. Okay. All right, so that's our setup for our first trade. Okay, if you want to take a screenshot of that, guys, just go ahead, take a screenshot. If you want to set them up later, this is our short. Now, because of our daily time frame, as you can see, we haven't had a rally today. All right, we haven't had a rally today. So this means that it's not really in our interest to be looking for a buying trade. Okay, it's not in our best interest to look for a buying trade on this. So we're going to just plan a sell on this, a short trade setup, and that's it. You know, we're just going to set up the short, and if the short doesn't get triggered, then, you know, we just if it starts to rally, we can cancel the order. Otherwise, if it just goes up from here, we do nothing. All right, and then you'll have to plan something yourselves during the week, or we may even send you a signal or something. Greg says, when's the best time to set this up? Usually after midnight, if you have, if we're closer to the entry, after midnight is usually the best time to set these trades up. Siska says, but what strategy or purely fundamentally? So we're going to use this as the significant level strategy, which is a sell below the 163.51. That's the strategy. It's a significant level strategy. What's the reason for after midnight from Greg? The reason for after midnight is that at 10 p.m. Or is it 11 now? I can't remember. The clock changes now. What is Tokyo, guys? Is it 11 now, or is it still 10? Can't remember. 11. Tokyo starts at 11, so it's between 9 and 11. Okay, so actually, so yes, until we get the next clock changes, you can set them up after 11. Okay, so the reason for the 2-hour gap, all right, so at the moment the US market will close at 9 p.m. okay, at 9 p.m. the market's going to close. Now between the hours of 9 p.m. and 11, right, it's usually 10 till midnight, but right now because of the clock changes, it's between 9 and 11 p.m. Those 2 hours are known as the dead zone. These are the only 2 hours during the market time where all the central banks are closed. All the major central banks are closed. So liquidity is at its lowest during those 2 hours. Okay? So when liquidity is at its lowest, what all the brokers tend to do is widen the spread, making it much more expensive for us to do business during those 2 times. After Tokyo begins, when the Tokyo market opens, which will be at 11 o'clock, the spreads will go back to normal. Okay, and this is why we're trying to avoid those 2 hours, and that's why I say, you know, after that time. All right. Okay, so that's our trade. Let's see if we can find another one. We go back to our day time frame. Okay, let's go back to the daily time frame. And as we've got the pound Aussie there, I'm going to go and have a look at the FTSE 100 and take a look at the FTSE. We still have an old long trade on there, which works beautifully. Let's get rid of the old history. All right, so look at the old monthly on the FTSE. So yes, the FTSE is currently in all-time high territory. and all-time highs are and all-time lows are kind of scary, like we were talking about in the pound, but we have to again think about the fundamentals. So look at these levels over here. These are the highs, the significant highs, okay, in the FTSE. Okay, they're the significant highs. And you can see over here, this is on the monthly time frame, that, you know, in the last 2 months, it's literally broken those levels in a very big way. You know, it's broken through all of them. Okay. Now, above these levels, you would have probably expected, or there probably were some traders that were taking some low risk shorts on that. None would have worked, to be fair, because of where the FTSE is right now. And the difficulty here now is that, you know, this is in an all-time high territory and is pushing higher. You know, and that's an inverse correlation to the currency, because this thing's been strengthening, but the pound has been weakening. Okay, they're not correlating positively. All right, so, you know, this pretty much looks like it's going to continue. You know, there will be a retracement at some point, some sort, but you can see what it's done here. When it last month it closed at the high, this month it's found support at the same level, and that support has held nicely, and it's just gone in one direction. It's a very strong move this month. We're only still, you know, early-ish in the month. You know, we're just still in the second week. So to be honest, this looks quite strong. This does look like, you know, I know some of you are looking for a short in the FTSE because of the all-time highs. And if we weren't under so much pressure with the currency, it might be, you know, a good setup. We don't have any resistance levels here. We don't know anything about this space that the FTSE is currently in. We don't know anything about it because we've never been here before. So what we need is, we need to see a sign of a reversal. So what you need to be looking for is, you know, something like this. You know, you need to see some kind of reversal bar looking like this. You know, by the end of next month. You know, by the end of next month, you need to see something like this. You know, maybe a red bar that's like this, and it closes, you know, weak like so, and that will give us a clear kind of reversal type of setup, you know, where we can expect to see, you know, the FTSE come back to some of these levels. I don't think it's likely to, you know, to plummet, but, you know, it may come back and retrace a bit before going on and making new highs, you know. So you may get a decent move to the downside. I don't know how far back. Cheers, Greg. But, you know, that's what you kind of need to see. So with the FTSE, I think we need to be a little bit more patient before before jumping in the FTSE, because right now it's just too strong to short. Okay, it's just too strong. All right. If you look at the daily, you can just see it's so perpendicular. It's you know, it's strong. Until we start to see some weakness in this, you know, it isn't really worth taking a short. All right. Even if you want to go down on this daily time frame and look for that, you still need to see some weak days. At the moment, it's closing closer to the high, which is a sign of strength, a sign of continuation tomorrow. So we need to wait to see if there is going to be a, you know, a retracement. The good thing is for that short is that for when it broke that high, you can see it's made this move and it has not come back to the resistance level, which is now the nearest support in the FTSE. It's at 7129.50. That's where the support is. So the short on the FTSE is going to be something like this. It's going to come back here and find support, and then most likely it will do this. Okay, and your shorting opportunity will be this move back here. But we need to wait till we see those negative days. All right. Okay, so let's just, I know we're sort of almost out of time or just out of time. Let's see if we can find one more currency. We've got the pound Aussie on there. Let's have a look at the euro dollar. Nothing on the euro dollar. It's bouncing off of its lows. It's in a bit of indecision in the last few days, so we can scratch the euro dollar. It's no good. Let's have a look at the New Zealand dollar on our list. Again, condition is not good. We need to see how this bar closes. Is it going to close above these levels? Because right now it's there. It's made an attempt to break out, but it's coming back in. So perhaps, you know, we may need more time on that. So the New Zealand dollar we can scratch from the list. Stuart says there's an engulfing on the dollar yen. Let's have a look and see if it meets the criteria. It is, but it's the wrong kind, Stuart. You know, this is, you know, not a great market condition, and this engulfing is not looking, it's not a positive engulfing. So that's going to be a difficult one, to be honest. Let's take a look at the dollar CAD. Again, would have been good if it, you know, was closed weaker. It's come quite a bit off of its lows, making this a difficult candle to work with. So again, the dollar CAD is not going to be so great. Let's take a look at the euro yen. Again, no good here. Market condition is not great at all. The pound yen, just going to quickly run through the ones we made a note of. I mean, it's interesting because the pound yen, this setup would, you know, wouldn't be too bad for a short-term rally over here if it wasn't because of how poor the fundamentals are. This does suggest, especially 2 days looking identical with this kind of reversal setup, it does suggest that we're going to get another retracement in the pound yen. It's not by any means a, you know, a big game changer. You can see already that we had a bit of a reversal and we had a small move which resulted in the downside. So this thing's already changing. It's heading back down. So what we're expecting here is, perhaps something like this, where it's going to move up, maybe come up here and then kind of do this stuff here. So we're not looking for anything long term on there, just that the fundamentals at the moment is going to be pretty much against us. So we may end up just getting several days along here. Basically, we need more information. So we can't use the pound yen. Let's take a look at the Aussie CAD. Another one on our list. That's quite an interesting one. We've had this reversal, nice strong day, it's bounce, and there's the kind of bar we want for a continuation to the next day. Let's have a look at the higher time frames to see if they agree. And that's quite nice for the weekly. All right, that's a very nice looking weekly turn, guys. After this trend drop, we have this is our reversal pattern for those of you who've done the training, and this is what we call the Morningstar Formation on the weekly time frame. Okay, we've got the inverted hammer. Okay, negative bars, inverted hammer followed by a strong positive bar. So what this suggests is that this thing is likely to continue on even through to next week. All right, even through to next week, this is likely to continue. So let's see if we can find an entry to buy the Aussie CAD. We are approaching one of our levels here, which you can see, which is 98.37. So let's take a look and see what that looks like. So we're going into a quiet little bit of a retracement, or could be indecision. At this time, it's likely to to spread out a little bit, which is good because it's order accumulation, and that's what we want. We need those orders to come in order to lift it. So let's have a look at this. In fact, what we could do is, rather than trying to take this here and then run into this resistance, we can actually spend a little bit of time on this, and we'll use this space up here. So what I want to do, 98.37 is our significant level. Okay, and we're sitting here at 98.13. So it's not a big distance between the next area of resistance. And what's expected to happen here is maybe some selling. And that's not a bad thing, because that selling here will create the buy orders above. So on its return, we can get triggered in and have this move upwards, a little bit like the same psychology we explained with the pound Aussie. And that trade is selling the pound, buying the Aussie, and this one agrees, buying the Aussie but selling the Canadian. And there's still some uncertainty around crude. So the best thing here, what would be a decent setup, would be to get involved in the Aussie CAD above 98.37. So we can say something like we can say something like 98, let's say 98, even 98.45 is enough. Okay, 98.45. So this is going to be a buy stop. Okay, it's a long entry, so it's a buy stop entry. Buy stop entry at 98.45. Okay, so our entry at 98.45. Now, when the price gets above there, it will trigger us in. It should hit the stops that's currently above the 98.37, which will give us the fuel and the momentum to drive it to the upside. We need to find some protection if the market does not go in our favor. Now, we know that once the price breaks above the 98.37, which right now is doing the job as resistance, it will change role to be support, and the prices should come back to it. Remember what we did on the previous. It should go above like so. Okay? And then we can expect it to come back, find some support there, and then continue its journey all the way. This is the textbook version of what we expect. It might string it out a bit, but that's ballpark is what we're looking for, which means our protection should be technical below the support, below the 98.37. Okay, so this means that we're going to say that our stop loss, this is our buy stop loss, is going to be the last swing low. This time we're looking for the swing low, like something like this, a swing low but higher up. So it's going to be the last swing low, and that needs to be below 98.37. Okay, so if we get an entry into this, we want our stop loss to be below 98.37 somewhere. Okay, it must be somewhere below the 98.37, because we expect that it's going to want to come back and test the support. So we don't want to have our stops too tight, otherwise we're going to get stopped out and miss the bounce. Okay, so we can say stop loss is going to be the last swing low below 98.37. Now, where's our profit target going to be? We can expect that to go until the next level of resistance, where we could expect those guys who are buying like us to take some profit, which means they will invoke their sell order, and we can expect this thing to maybe start to come off when it hits 98.96. Okay, so we're going to say, we're going to come out just a little bit earlier, and we're going to say our target is going to be 98, let's say 98.90. 98.90. So it's not a big move. It's not really a big move at all on this one. Okay, but you know, pips is pips, and you know, as long as you know where you know it meets you know risk and so on, you know, it's going to be all right. Now again, because of the strength of the move today, we don't actually want to plan a short. There's nowhere for us to plan a sell. So this one again is going to be a buy or do nothing. All right. So that's our plan for the Aussie CAD. We'll go long above 98.45. Stop is going to be last swing low below 98.37, and the target is going to be 98.90. Okay, Lisa says, when will the affiliate links be sent out? I don't currently have a trading account set up and would like to get on these trades. Okay, so Lisa, just send an email to info@mdtradinguk.com. Send an email and I will get one of my team to one of our guys to send you out the broker link. All right, and then you can set up your account. Okay, you need to follow the process, which is like sending your ID and all that kind of stuff from the registration process. You do all of that, and then you can you should have that sent out to you. Buy limit around 95.75. Taylor's asking. Taylor's one of the advanced guys, so yes, Taylor. If we get back down there, that's quite a good buy limit. Yeah, you can use a limit order there. Absolutely, absolutely. All right. So, okay. So, any questions on what we've planned or what we've discussed tonight, guys? Yes, Falani, I'll send you the link as well. Just send an email requesting it to info@mdtradinguk.com. I'll type it in the chat. Okay, you send an email and we'll get you set up. Wendy says on my LCG, my smallest pip size is 0.5. Yeah, yes, 50p a pip, I believe. Yes, that's the smallest on there, correct. And you kind of don't really want to go smaller than that. You know, you want to be at least 50p a pip. You know, it's not worth going down to 10p. Remember, we want to grow our psychology. We want to make money that's you know, that means something to us. We want to see our psychology grow with our account. Okay, and we don't want it to take forever. So 50p a pip is good enough. Luke says, how come we are opening CFD accounts, not spread bet? So CFD accounts are better than spread bet accounts, Luke, because CFD pricing usually is, first of all, you usually get more assets that you can trade, and it is when you have a spread betting account. Spread betting accounts are usually tracked market prices, but you tend to trade within the broker's network. Every broker that does this, that offers spread betting, it's like, for example, let's say that you decide to go long and then I decide to go short. Okay, I'm on the other side of your trade. Okay, this is how spread betting accounts work. All right. Now, if you're on a CFD and you go long, that's going to be out in the market. So yes, there'll be someone else, but it's not contained within the broker as such. Now, there's not you know, a great deal wrong with that. It's just that sometimes. And I'm not saying this is LCG, because they're not, you know, they're regulated and they have to audit. Okay, but sometimes with some brokers, and remember, you're free to use any broker you want here. Okay, but with some brokers, they go on the other side of your trade purposely. Why? Because the broker knows out of all their client base, who are the guys that are never making money, that's always losing money, and those guys just keep refunding and refunding and losing money. So instead of pairing if let's say, if you know, and obviously you know this is not going to happen, I don't want this to happen. Let's say you was a guy that was always losing money, and you know you're a big hitter, so you trade large volume size, but that's just, you know, a portion of your of your wealth, and you do it because you enjoy it. You don't really care about making money. You just like the thrill of being in the financial markets, and you're throwing around big pips. Now, instead of pairing you with someone else in the network, so what some brokers will do is they will, you know, be on the other side themselves, because if you're always losing money, then it means that if they hedge against you, they're going to make all the profits. Okay, and this is how all spread betting works. All right, it's and that's why with spread betting accounts, they can offer you the tightest spreads most of the time. They can offer you guaranteed stop losses. How can someone guarantee your stop loss? Okay, how can a stop loss be guaranteed? Right? It's not possible for a stop loss to be guaranteed. All right. If you don't believe me, ask Alpari if the stop losses are guaranteed. Okay. Ask Alpari. So the only way they can do this is if the trade is not in the real out in the real market in the first place. That's when they can guarantee a stop. All right. So CFDs is better. You're in the market. You can trade other assets and so on. All right, and it's cleaner, better pricing. You get to access the aggregated data feed that's there as well. Okay, and that's why we make this recommendation. And if you want to do spread betting or you prefer spread betting because you believe it's tax-free, let me clear that up for you too. It's not tax-free. Okay, nothing is tax-free in that respect. All right, the minute it becomes an income, it is not tax-free. All right, if you're going to take 3 spread betting trades per year, okay, then HMRC would probably look at that as maybe just the capital gains if you're lucky. All right, if you do 1 or 2, maybe you might get that as tax-free. The minute that you are doing this as an income, then you're going to be subject to income tax. It's as simple as that. Okay, so don't worry about this. Is CFD still better for overseas residents from Wendy? Yeah, absolutely. Absolutely. So long as they allow it for overseas, most of them, as far as I'm aware, they do. There's not a problem with overseas using CFDs. So yeah, it shouldn't be a problem. Shouldn't be a problem. Any other questions? Before we wrap up? All right, so this session is recorded. Okay, the section on the website where it would normally be hosted is not yet completed. It will appear there when it is. We're just getting the log-on authentications for you guys up and running. It should be within the next day or 2. So if you want the recording, you're going to have to send an email to request a recording, and we will actually email the recording to you. Okay, you can download it and then you can watch it at your leisure. All right, if you wish to have the recording of this session. You have the trade plans. We will assist you in managing the trades through your groups or through the signals. We will assist you with the trades. If you need to make any adjustments, we'll let you know and so on. And if there's any questions you want to ask on the fly, just type them in the WhatsApp groups or send an email. We are going to be here monitoring, managing and supporting you every step of the way through this trading journey. And I said next week we will send out the announcements to all of you in the groups, information regarding your training and your education. And those of you that have already completed the old apprenticeship training, we have some nice goodies for you guys. Your education is not yet done. Okay? So that leaves me to wish you all a good night or a good evening or a good morning, depending on where you are. You know, happy trading for the rest of the week. Keep in mind on Friday morning, I believe, there's going to be a statement or a conference from Janet Yellen. Keep your eyes on that, guys. We're likely to have some volatility in the markets on Friday morning. Okay, so keep an eye on the markets for Friday. Have a wonderful evening, all of you. Thank you for joining me in this session. Take care and bye for now. Cheers, guys. Bye now.